Welcome to Raising the Curve, a podcast designed to teach you everything that you need to know to be better with your money. Come and learn alongside me, Sophie Hallwright, a total beginner, from the finance expert, Victoria Harris.
Soph asks all of the questions you wish you could so that finance, investing and growing your wealth actually makes sense.
Yes, it's expert education, but that we promise will not be boring.
And in the wise words of Cher,
my mom said to me, "You know, sweetheart, one day you should settle down and marry a rich man." And I said, "Mom, I am a rich man."
Come and talk and learn and laugh with us, because together we really can raise the curve. I don't know if I've ever interviewed sisters on the podcast before, but this conversation is with Ali and Gaby Rosenberg, who are the sister duo behind a really amazing product called Blossom. It's an Australian fintech, so like financial tech product that's making it accessible for everyday investors like me and you to invest in fixed income. This is one of those asset classes that doesn't get heaps of airtime because maybe it's my influence, I'm not sure. But for me, it feels like a slightly more boring investment. But do you know what it is? It's stable and it's consistent, and you actually have somewhat guaranteed returns. And that's because it's fixed income. So unlike something like a stock or investing in the stock market, fixed income gives a lot more peace of mind for people who don't really like the ups and downs of the stock market. And this is something that we're going to speak to more on the podcast. Vic and I are going to do a deep dive on bonds and sort of explaining them in a bit more detail. But this was a really cool conversation, particularly with everything going on in the market right now. But neither of them planned to have a career in finance. Like they worked for venture capital and startups and in the tech space. They basically saw this gap in the market, which was there weren't that many products that were serving like everyday investors. It started in Australia. It's now come to New Zealand, but it's kind of like, I don't want to say it's like a Sharesies for fixed income because that's totally not really what it is, but it's basically a way where you can set goals. You can funnel money in, like a set amount, however much you want, or you can do one-off payments, and you're investing just in fixed income. This is an asset class that I've not even thought about, honestly. Like, I've got no money in fixed income, and this really opened my eyes up to like how it could have a really good place in my portfolio. It probably comes as no surprise that two female founders have a really philanthropic side to their business, which I just love. But yeah, just the way that they approach money and investing was really interesting. And I went into this conversation thinking, I don't think fixed income is for me. I know that it's a really great way to build like long-term wealth, and it can be an amazing strategy for people who don't really like the risk or the up and downs of investing in the stock market. But what it really made me realize is even if I like investing in the stock market and in stocks and companies or crypto or whatever, even if I have quite a high risk appetite, let's just say, investing in fixed income is a really amazing way to diversify, and to see a place that you can do that in a really easy way is just like tick, tick, tick. So these girls are amazing. They know what they're doing. And yeah, I loved this conversation. So without rambling on for too long, here are the two amazing founders of Blossom, Ali and Gaby Rosenberg.
Great jump on.
Don't you reckon it's great? This is
great.
This was a find from like a vintage shop. It was like maybe $30. And I saw this a couple of years ago and I thought, this honestly looks quite expensive. Like, it looks so well made. It's so warm. And because I've been in New Zealand for way longer than expected, like I was only meant to be here for like 6 weeks and it's now like on month 4 or something. I didn't come with any like enough clothes for the season change. And I went to see my grandma who lives on Waiheke, and I just shoved a whole lot of shit under her house before I moved to London, being like, I kind of don't want to throw this stuff out, but also like as if I'm going to get like a container ship to send all this to London. And it was just like, you know how people say hide toys from kids because it feels like a new toy? This felt like I feel like I've got a new wardrobe. I'm like, it's such a hack. It's actually quite funny that we started this interview talking about clothes, because don't you reckon as sisters, it's like the number one thing. Well, this is the number one thing that me and my sisters always fight about. She'll borrow a really nice top or something and she'll tell me she's given it back, and then I see her like posting something on Instagram 2 years later and I'm like, that bitch has still got my top. So Gaby and Ali, you guys are obviously sisters. You're not twins, but you come from a family of two sets of twins, which in itself is like so cool and different. Do you think of each other as business partners at this point? Do you think of each other as like friends, as sisters? You must be the most like intense relationship in each other's lives, surely.
So I think the beauty is we're so different. And I mean, we are 2 out of 4. I have a twin sister. She has a twin sister. The dynamic has changed our whole lives, but in business, I mean, we're definitely more sisters than business partners. But as I said, the beauty is we're so different. We very much have our sole focuses in the business. We have our own lanes. I'm more focused on the business side. Gaby's more focused on the retail side. We've learned a heap from each other. Gaby's the most disciplined person I've ever met in my entire life. And I think the challenge is that if I call her on a Sunday, it's a gamble as to whether she's going to answer my phone because she doesn't know if I'm calling about work or she doesn't know if I'm calling to invite her for dinner on my couch. And so we just have to go with it. But you can't beat working with family. I mean, we've got so much positive in terms of trust and alignment, and we know we're in it for the long haul together. So
I mean, you literally can't get rid of each other. The interesting thing that when you just said like, oh, she doesn't know if I'm calling for dinner or for work, do you separate out your comms? Because this is something that Vic and I have recently done, because it was just getting so messy, being like, how was your date? What was your Saturday night like? Was the wedding fun? Also, can you make sure you send me that invoice for blah, blah, blah? You know, like it was just getting a bit like, whoa.
We should keep it more separate. It's a good idea, but I think we try and use WhatsApp for personal stuff, and then we'll use Teams or email for work stuff.
We've gotten better. I think I've learned that I need to put things in Teams if they're not urgent.
You're so the Sophie. Oh my God. And you're like, no, I must get an answer to this right now. And Vic's like, not urgent.
Yeah, that's it. That's exactly it. On the clothes though, the clothes is funny because we are sisters, and Ali's wife actually is like the biggest fashionista on planet Earth. She's just like our style queen. And she takes me shopping once a year, gets me my entire wardrobe. Ali comes too. And then I basically like walk into the shop. I go straight to the changing room. Kate, her name's Kate. She does like a full once over, has like 2 armfuls of clothes, chucks them to me in the changing room. And then we go out with half the shop, and I do not online shop, don't buy anything. And I just don't touch clothes for the rest of the year. Happens once a year, every year.
It's actually such a good strategy. I've got a friend who works in finance. She works in fashion, and she's got the most amazing style. And she's also so good at picking things out that are suitable for my body and skin tone. You know, it's not just about like, oh, this is cool. It's like, what looks good. When someone's good at that, I honestly reckon it's almost to the point now where I'm like, maybe I would pay for that as a service. Like maybe it would be once a year, and it's like, cool, here's the things you buy for like all of the different seasons, do it once and be done with it. Like I couldn't think of anything more awesome.
I would pay for that in a heartbeat if I didn't have a built-in sister-in-law who was just the queen of all queens.
I went to the hairdresser today, and my hairdresser is also a friend, and I was like, I love your pants. And she's like, oh, I've been looking at these really cool ones that are on ASOS at the moment. And I literally just opened it up and I was like, can I buy them? Do you care if I buy them? I really like them. She was like, no, go for it. I'm like, stunning. You know, like anyone that does a bit of research and development for my wardrobe, I'm here for it.
Amazing.
Okay, so you've started a business together. Firstly, congratulations. What you're doing is amazing, and the inspiration it gives me seeing 2 women founders, not just women founders, but in the fintech space. So for anyone that's like, what is that word? Financial technology. That is quite rare, like very, very rare. Like the finance space doesn't have a whole lot of women spearheading new products, and neither does tech. So firstly, thanks for doing that. What was the moment where you realized, okay, like this is the business that I want to build, or that we're going to build, or where there's this giant gap in the market? Was heading into the finance, technology, fintech space always something that you'd thought about, or had this idea or opportunity kind of just like come up one day and you were like, let's try it?
We had both interesting journeys into finance. Mine, I actually tried to get into physio, and then I didn't get the marks for it. And I really didn't know what to do. So I was like, Dad, what do you think I should do? Mom, what do you think I should do? And then he basically said, just go try do a commerce degree. It's a good all-rounder. You'll learn a little bit and then you can decide what you want to do from there. And I was like, oh, okay, I guess I'll go do commerce. So I plodded along and got my commerce degree. And then I actually got an awesome opportunity to join a tech startup. And then from there, I went to another tech startup, and I loved that you could kind of just marry whatever your passion was with tech, and then boom, you have a tech startup.
That's such a cool idea.
It was really cool, and I love sport, exercise, and fitness. So the first tech startup I joined was a wellness tech startup for endurance athletes and endurance events. And I was like, this is cool. I really like this. Small team, fast moving. Everyone's important. Everyone has a say. And then from there, went to another one. And then COVID hit and we all got stuck at home and started passing ideas around the dinner table. And the stock market had crashed and the crypto bubble burst and interest rates were really at all-time lows. And we just didn't know what to do with our money. We spoke to friends and colleagues. They were also scratching their heads, not sure how to beat inflation at the time. And we started looking into fixed income.
Okay, wait, one moment. Because we've got a lot of people who maybe don't know what fixed income is, who might not even follow the idea of like low interest rates mean what happens in the stock market. So, I mean, like we've spoken a lot on the podcast on the Curve Weekly, and Vic's been like, we need to speak about fixed income, and we actually haven't got there yet. So it's a really good opportunity to break it down for anyone that doesn't actually know. So before we go on, can we just do a little disclaimer on the reason why at that time fixed income felt like a good opportunity and what it actually means, like where your money's going when you invest in fixed income?
So fixed income is a defensive asset class, and it's a type of investment that pays a fixed return until the end of the investment period. So I think the easiest comparison is shares because they're definitely more popular. So with shares is performance-based. So let's do Nike. So you have Nike shares, and 1 year they might be worth 8%, or 1 year they might be worth 2% if Nike have had a bad year, and then the next year they might be 5%. So it fluctuates, and it's performance-based depending on the performance of the company. But with fixed income, as it says in the name, your returns are actually fixed. So, for example, if you have a fixed income investment that is a 5-year maturity date, so that it ends after 5 years. So after year 1, if it's paying 5%, you get 5%. Then after year 2, 5%. After year 3, 5%. So it's actually fixed instead of fluctuates with that performance.
It's like a guaranteed number. So it's almost, would you say like a good example would be like almost like an IOU? So it's like, I'll give you this money and I will guarantee that I will give you $5 every week to say thank you for giving me the money.
Yeah, that's how it works. Obviously, there's not a lot of guarantees in life, but yes, if you, for example, a fixed income instrument is a bond. So if you want to invest in a bond, you get the 5% at the end of all the 5 years, plus after the 5 years, you get all your initial investment back as well. And just to explain a bond, it's a debt instrument, so you're loaning money to someone.
God, I'm so uninspired by the idea of that. Like, I'm like, oh my God.
Okay, stick to the Nike story and imagine we need to build a Ferns Stadium in New Zealand. New Zealand Ferns, the women's
Silver Ferns,
team.
love that. Yeah.
So if we needed to build a stadium and you needed to lend them money for building that stadium, they would commit to the interest that you would be receiving each year, plus you'd get your money back at the end of that term of the investment.
Stunning example, love it. So bonds are not the only fixed income. That's so funny because I always just thought that was the only type.
No, there's a couple other types, but bonds are definitely the most common. And especially for our fixed income portfolio, semi-government, government and corporate bonds. And that just means that sometimes you're loaning money to the government or sometimes you're loaning money to a corporation like Nike. You could also loan Nike money. Maybe they need to build a new factory in the States. So you'd loan them money. They have the money to build their factory. They pay you interest every year it takes them to build. And then at the end of the 5-10 years, they have their factory and you have all your money back, plus you get to keep the interest.
So why did you think in 2021 when COVID was happening and where you didn't really know where to put your money, you were saying. Why at that time, so when the economy is essentially really uncertain and not doing particularly well, why is fixed income such a good investment at times like that?
So we liked it for ourselves because there was extreme volatility in the share market. So you didn't know how the share was going to perform. Maybe you had a share that was paying 8% and then it dropped down to 2% and then it went back to 5% and then it went back down to 0%. You just don't know. And the reason that we like fixed income is because of that fixed return, so that you know that you're getting the 5% year on year on year. Obviously, we're cruising over this. There's lots of risks involved, and maybe the company goes under and then they can't pay the money back to return the money for the bond. There's heaps of risks. We can talk about them later.
Oh, disclaimer.
Yeah, exactly.
Basically, most of the time, and look, I know that we're not financial advisors here. This is not financial advice, but essentially, if you're doing fixed income, am I right in saying because you're going to really well-established companies or governments, the chances of that happening, whilst they're not impossible, there's way less risk than a Nike share that's going from 2 to -5 to 25 to, it's a completely different experience for an investor, right?
Yeah, especially if you're buying a government bond or investing in a government bond. If you loan the New Zealand government money, chances are the New Zealand government aren't going anywhere and they're going to be able to pay you back.
And also, if the New Zealand government is going somewhere, there's probably a lot more happening that you're stressed about than your money you lent them, I'm imagining.
That's what we always say as well. We're going to have bigger problems on our hands if the government bonds can't return the funds. Exactly.
And do you both invest a lot in fixed income?
Through Blossom, we both do a lot. Like I have 90% of my investable assets in Blossom. And that's because I'm saving for a home deposit. And I think it's really perfect for my sort of investment time horizon at the moment. So yeah, I have 90% of my money in Blossom and then a bit elsewhere. And I believe Ali's the same.
Spot on. These days, every dollar I earn goes into my Blossom account for good reason, because I'm saving for a home.
So why? So for anyone that's like thinking, okay, well, I hear that actually stocks or like shares is a really good investment too. Like, what would the difference be between the type of investor that would be a perfect candidate for fixed interest versus stocks or other investments, whether it be crypto, and let's not even go there with property. Let's think about like more like sort of the company space, because a lot of people listening to our podcast are interested in the stock market. So can you explain at what point in your investing journey or for what reason you would opt, whether that's personally or just general like knowledge around investing, sort of like time horizons and how much money you have? How do you figure out if fixed income or the stock market is the right thing for you? So,
as you said before, we're not financial advisors, so this isn't financial advice. But there's a whole bunch of schools of thought. I think the one that we love the best is that a diversified portfolio just includes everything.
Oh, I love that. I'm such a fan of that.
It's really the only way to spread your risk properly. And I think if you have a little bit of your portfolio in everything, then you're setting yourself up for a really solid performance. So a little bit in stocks, whether that's Australia and the New Zealand Stock Exchange and the US Stock Exchange, and then a bit in fixed income. And then you don't want to go into property, but if you want to have a little bit in property too. And then if you're getting some FOMO, like we both have FOMO, you put a little bit in crypto just so you can learn how it works. I think there's another school of thought that says, with fixed income specifically, you should have the same percentage of fixed income in your portfolio as the age you currently are. So if you're 30, you have 30%.
What?
If you're 40, you have 40%.
Oh my God, it makes sense.
Mm-hmm.
Explain why, Gabby. Sorry, I'm getting too excited, but explain why.
That's because it's generally more predictable and stable asset class. And obviously you don't have time, the older you are, to make back potential stock market corrections. And so you just want to be more defensive, less growth focused, because you have less time to make back what you're losing potentially on bad stock investments.
That's actually genius, because when you're younger, if you're 0, you don't need any money in your fixed income. But if you're 100, you probably want 100% of your money in fixed income, because it's way smoother of a ride. It's less returns, but it's way more consistent and safe.
And then the third approach, exactly right though, the third approach is more of Blossom's approach as well. And it's basically that you need to think about what you're actually saving towards. Like, what are your investment goals? What are you saving up for? Because, so I'm 28. I don't have 28% of my portfolio in fixed income because I'm saving for a home and my time horizon is 2 years. So I want to buy a home, which means I need a home deposit within 2 years. So 90% of my portfolio is in fixed income, because in those 2 years, if I put everything into stocks, I might not have the money when I need it.
Did you make that decision before the stock market totally shat its pants? Or
I did.
I did. Oh, that's good, because I did not do that.
I think now, though, probably most of your stocks have corrected or almost fully corrected themselves. But buy the dip, everyone. Buy the dip. Anyway.
Buy the dip. Go shopping in the dip.
Exactly. So it's different. Everyone's different. But I have maybe 1% in crypto, 90% in fixed income, and the other 9 is in stocks. So that's me at the moment.
Yeah, I think from my personal perspective, it's definitely about risk tolerance and how much sleep you want to get at night. So, I mean, I really like to sleep peacefully. And so knowing that my majority of my portfolio is in something that is predictable is definitely worthwhile. But personally, as I said, I've got most of every dollar that I'm earning is going into my Blossom account, saving up for a home one day, please God. But it's, for me, investing in individual shares definitely takes more time out of my day to research, to feel comfortable with the investment. I also know that up until recently there was a bull run and the stocks were performing so well, and to expect that to continue is quite unlikely. So that was the reason for shifting away and having more of a focus on fixed income personally.
This is the coolest thing we've ever done, I think.
We have an app.
Can you believe it?
I know, quite cool.
If you told me that even 3 months ago, I'd be like, as if.
I feel like when you have an app, you're an actual business.
I know.
Yeah.
And we haven't really talked about this much. I don't know why, but the Investing Club, it's an app basically. Yeah. So you can download it from whether you're
Apple and Google.
Yeah. You can watch all of the investing ideas. You can chat in the community. You can speak to Vic directly, all on the go. And the reason that we went down this path is just like, we've had so many students go through our courses and stuff, but when you have to be sitting at your laptop, you can't do it on the go. It is kind of, I mean, everyone's busy.
And we can notify you when things in the stock market happen.
God, yeah, we've got push notifications.
Yeah, so it's really, really great. We did one this morning. We do a little update, a stock market update every week. So you can be on the pulse wherever you are, going about your daily lives. So we got you.
Yeah. If you want to try, we've got a free trial for 7 days. And jump in and have a look around. Comment, talk to us, share your ideas. It's a really cool space. And we've got all of we've put a link in the podcast show notes so you can find out more. So then, okay, can we talk about the idea that fixed income is often not associated with younger investors? Because if I'm being totally honest with you, I love the theories that you shared. I love the idea of like, however old you are, you should have that amount in. I mean, I know that's not you should, but that's a school of thought. I love that. I love the idea of put a bit of everything in. What would you say to people who, because this is something I think that's taken ages for me to build my confidence up to go and invest in the stock market or in shares, is that now I realize I'm young, I've got heaps of time. It's okay for things to like dip and go through the floor because I'm holding them for a really, really long time. And I would rather, with a decent amount of my money, be getting better returns. Is there any, I guess, just like thoughts on that or your own personal approaches to how you are with your money? I know right now you've got, like particularly for you, Gabby, like the fact that you're wanting to buy a house in 2 years, it makes total sense to me that you have like almost probably 100% of your investments into fixed income. But Ali, if you're like, I eventually want to buy a house or, whatever your other massive goals are, which I'm sure there are many, is there a part of you that, like, how do you not buy into the idea of like, I don't know what I'm trying to say. Basically, I get really excited by the idea of not a quick win, but I'm kind of like, look, I'm not interested in it taking 500 years for me to get a 3% return. Like I'm comfortable with what it means to invest in the stock market. I understand that I'm leaving my money for a long time. I've really had that drilled into me for like 5 years from Vic.
Yeah.
So like if we're thinking about Blossom and like how that could fit into someone's portfolio, can we just speak to that more? And like maybe Ali, for you, like because you haven't got a super like close goal. What's your decision for 90% of it being in there?
I still think it's just the peace of mind piece for me personally. I mean, I probably should have more in a listed ETF or a fund that is, tracking the market and over time those returns hopefully should come back to me. But yeah, given I really don't have a clear timeline on when I would like to buy a house, so the liquidity is important to me, the current returns are important to me, and just from a peace of mind perspective, like I'm very happy getting the return that I am through my Blossom account. And again, this is just entirely personal. I have confidence in the approach, I have confidence in the strategy, and I'm very from a risk adjusted perspective, I'm very comfortable with what I am getting for now. And thankfully, looking at how the market's performed in the short term, I probably would not have slept as well in the last few weeks, which has been important to the development of our business. So.
Well, it's so important. And actually what you said before really struck a chord with me, because when the market totally had a meltdown recently, I went, because we've got an investing club where we talk about different investing ideas, and I went and bought a bunch of stuff that, Vic had done so much of the research for me. So I was really lucky in that she wasn't like, go and buy Xero or go and buy NVIDIA or whatever the thing was I bought. It was just that I had that like peace of mind because I knew someone that knew what they were doing had done the research. But even then, like I would be totally lying if I said I wasn't sitting there being like, oh, am I doing the right thing? Oh, like it's like, it doesn't really, I think unless you're a professional active investor that lives and breathes the markets all the time and like looking at everything, if you're picking an individual stock or you're doing like the S&P 500 or ETFs or whatever. ETFs, I guess, is different. But if you're like choosing companies, you've got to be pretty confident if you're not checking it all the time that it's like a desert island investment. So I totally understand the concept of like how you're investing. And have I been totally stress-free in the last few weeks? No, like definitely not.
That's my whole investing thesis. Like I want to choose funds. I don't want to choose individual stocks, because if you choose a fund, all you have to choose is the asset class and the fund manager. And then you have so much more confidence because you're letting the professionals do what they do. You still got to DD the asset class. You still got to DD the fund manager. But that makes me feel comfortable. For example, crypto, like I didn't go and just buy shit coins. I'm investing with the crypto fund manager. I still know I'm going to lose all my money. But I'm like, at least I'm not doing this in a stupid way. And I've done as much research as I can because it's as far as I understand.
Yeah, I was just going to say, I think it comes down to genuinely what you understand. And there are some things out there that we are just not going to understand. There's some asset classes that I'm not even going to try understand. So to Gabby's point, you pick the manager if you want exposure to it, and you make sure you get a level of information that you're comfortable with. But I've been burnt so many times just, trying to dip my toe into something that I'm never going to understand, or something that sounds too good to be true. And it's just a lesson that I've learned is not the way that I need to be investing. It's, double down in what you understand, have confidence that you're making the right decision. If it's the wrong decision, you'll understand why and you'll learn from it next time.
Ali, can you speak to even just one example of when you were like, wow, I really wish I hadn't done that? Like what was something you tried to dip into or invest in and you were like, yep, won't be doing that one again?
It was a crypto coin. And I've dabbled in crypto, I say mostly just to be educated and to understand what's going on in the space and to follow the trends. I got really deep at one point. I was in like a Telegram channel reading what people are writing about. Oh yeah,
she got in there real deep.
Yeah, it was exciting but equally horrifying at like the way people speak about the asset class and what people were essentially gambling on. And, I was playing with significant money. I mean, it was a couple $100 because I thought if it 1,000x it was going to, be significant. But really it was to learn, but it was a big loss of money and silly. And I never understood what it was even about. And there's still no real, substance behind any of those things except hype, which if you're lucky and if you're monitoring at all times, you could benefit and you can do really well and good on those people. I don't have the time, energy or risk appetite to do any of that anymore. And so we have a rule at home that if I start talking about it, my wife's allowed to, go and buy something herself, knowing that I'm making a really poor decision.
I love that. It's so good to have little rules like that. And it also makes your ears prick up when she's like, yeah, I bought a new skirt. And you're like, oh, it's because I'm doing that thing, aren't I? I'm doing that thing, which is being silly with my money. Yeah, okay. I would really love to speak about the phrase that you've both coined, the idea of saving like a girl. What have you learned since starting Blossom when it comes to saving, putting money into fixed interest so that it's saving more than what you would in a bank account? It's a brilliant concept and it's an amazing product. And it makes sense to me why originally you would have thought this is probably a perfect product for women. But what you've seen is actually, I think, was it 62% of users are women, but then there's 38, my maths is so bad, men. I guess why initially did you think that it was more female skewed? And what has been quite interesting, am I right in thinking that someone went and put in like, I don't know, 400 grand or something into their account without even thinking or contacting you? There's obviously something there about the concept of saving and the way that you've positioned this product where it really resonates with people.
We are 62% women, totally right. And in terms of the saving like a girl points that you were touching on previously, we go through the data often and we found that women are using automation and goal setting and long-term planning within the Blossom app to build lots of financial security. And then we did compare the data, the women on the platform to the men on the platform. And the women compared to the men, they were making frequent smaller transfers. They were automating their savings at a higher rate. They were setting clear goals. So you can go into the app, choose a savings goal, home deposit, holiday, wedding, baby. We've seen it all. Haircut. And then they were also locking away funds into Blossom Plus like products. And Blossom Plus, you can lock your funds away for 3 months and then you get a higher return. And so, we were just finding all this amazing stuff in the data about how men were using the platform versus how women were using the platform. Basically, they would just had this awesome, consistent and intentional approach, and they just made it really effective.
Go the girls, honestly.
And on your 400K example, that was a man. And what we do find when it comes to men is they start harder and faster. And that's the difference.
Has anything more true ever been said about the whole male species? Like, wow.
They're just bigger risk takers and they're willing to go, dive in deep from the start. And then, their first initial transfer is that large amount and then they keep topping up. Whereas women just have that consistent, steady approach. And we hope that over the long term, we start to bridge the gap. But for now, that's just the behaviors we're seeing.
What do you reckon's been the most interesting learning when it comes to what you've seen through the data of like that you've almost been like, that's so interesting. I'm going to go and make this change? Or like, have you learnt from your users? Because I feel like you're in this really unique position where you're seeing tens of thousands of people are making decisions with their money and where they're putting it and what they're saving for. Like, what have some of the most interesting insights been?
We learn from our customers every day. We're always chewing through the data. So we're fascinated once a week. I think for me, you hear a lot about how millennials aren't saving, and our average age is 31. So that's still millennial. People aren't saving and everyone's getting themselves into trouble and all disposable income is going out the door. The average savings in this neck of the woods is 30K per Australian. How can you live on that, etc.? And I think what we've seen in the data is people's savings goals and what they're saving towards. So a lot of it is rainy day funds and they're just squirreling money away for a rainy day, being super responsible, taking their own financial situations into their own hands. And so I think we feel like really proud of our users and our audience. And it's like people know what they're doing. People absolutely know what they're doing. And then the second thing is home ownership. Everyone says it's the Australian dream, it's the Kiwi dream, and we're seeing that time and time again. The most saved towards goal on our platform by far is a home deposit. And it just shows everyone you just want to work towards owning your own home.
What's the weirdest one?
Oh,
a haircut's pretty good. Like to go and put money into a fixed interest account to save for a haircut is kind of iconic. But are there any other funny ones?
We had engagement ring, which is nice because we know when people are about to get engaged, which is really sweet.
That's so sweet. How much were they saving, by the way? Like, I've got no clue what people spend on an engagement ring.
I don't know in that scenario, but our rule of thumb is always 3 months' salary.
God, that's a lot of money.
It's too much money. I'm not spending 3 months' salary on an engagement ring, that's for sure. We've had funny plastic surgery. Someone had boobs.
Also get it. Like, save your money for whatever you want. Like, I'm kind of like, good on you. I'm assuming it's she.
Yeah.
Obviously knows what she wants. And she's like, do you know what? I'm going to get to that goal faster.
Yeah. And so if I think to your point earlier, like people just want to feel savvy about their savings and they really they make that heard. And we've got such creative other creative scenarios, you know, people putting their tax money in an account just to earn money on the money that they know they're going to have to pay away to tax, but at least it's sitting separately so that they're prepared for the future. And we've got, you know, accountants doing nifty things. So it's just, we get to see savvy, smart savers. And I guess we just feel proud of everyone, as Gaby said.
It's so cool to see. And you said the average age is 31. Do you think that fixed income has a place, like would you like to see that changing in terms of there being a more broad or less consistent age, and for it to just be people of any age have a percentage of their portfolio in Blossom or in fixed income? Is that kind of what is driving the product and the growth and like wanting to speak to different audiences and educate? It's like old people, young people, anyone can benefit from this asset class?
Absolutely. And it's also something that is isolated in Australia and New Zealand. Like if you take a UK market or a European market or the US market, retail investors there, like normal everyday investors like you and us, they know what fixed income is. They have access to it. It's in the broad conversation, but for some reason in Australia and New Zealand, it's just in the conversation of high net worths and institutions.
I reckon that's honestly any kind of wealth building. But are you saying basically more so in the Southern Hemisphere, it's almost like even less spoken about than other parts of the world?
100%. And there's also a few reasons why. In the Southern Hemisphere, and especially Australia and New Zealand, there's really big barriers to entry for an everyday investor to access a fixed income product. And the most sophisticated fixed income products, the one you really want to invest in, they have high minimums. So maybe you have to start with 250K or they won't talk to you. High lockups, you might have to lock your funds up for 6, 12 months or even 2 years. And then there's also, on top of both those hurdles, there's high fees for someone else to manage your money. So not only is it, the reason we could say that a lot of it is not talked about is because we can't access those opportunities anyway. So what we want to do with Blossom is we want to work to democratize the space, to tear down those barriers to entry, and then to try and bring it back to the conversation, because we really do think it is an awesome option and it should be part of your investor toolkit, and it's the best way to diversify your portfolio.
I would love to finish with one final question, which is probably going to be the most long-winded question ever. But for those who are listening who are still thinking, okay, yeah, cool, I think I should probably be putting some of my money into fixed income. But now we've got the same issue that I've had when it comes to the stock market or property, where I'm just like, where the hell do I start? Or how would I even know what type of fixed income is right for me? Are there some guardrails or information? Like, obviously, we're not saying go and put $30,000 in X. But what would be some key things for an investor to think about when it comes to like, okay, cool, I've said to myself in my head, tick, I want to have some money and some fixed income. It feels like a great way to diversify. The market's absolutely all over the show and it kind of freaks me out, but I don't want my money just sitting in the bank. What are some ways that they can like think about the options that are on Blossom or outside of just fixed income as an asset class, how can you think about like where you put your money? Is it as simple as just like, I put all of it in one? I have no idea. I would have no idea where to start. And I imagine there's a lot of people probably feeling the same.
Yeah, for sure. I think, just trying not to give any financial advice. I can maybe speak personally what I would do.
Yeah, that would be amazing.
It's the same thing as, would I want to go to the stock market and pick a stock, or would I want to go to the stock market and invest in an index fund where I can invest in 100 products that will fluctuate with the market as it normally does, instead of put all my eggs in one basket and potentially watch the stock drop. So it's the same thing in the fixed income world. You can go and buy a bond, but they're really hard to afford. You might have to pay $250,000 to make a single bond investment. Or you can go and find a fixed income fund manager that's going to manage 100 different fixed income investments, and all you need to do is make a single investment into that fund. So if you wanted to do that, the first thing I would do is go and do my due diligence on the fund manager, check the return that I'm going to make on the fund, check how much I'm going to pay in fees to make sure that I'm still making, like, it's worth it for how much the fees are. Read the risks in the disclosure document or the fund fact sheet. And then I'd talk to my financial advisor and see if they think it's a good idea as well.
Okay. Can I ask you, for those people who are like, I wouldn't know where to start in terms of like, where would I even find the fees? How do I figure out what a good performance is? Like, there's a lot of people that haven't worked. You guys both have been in like VC and you've studied economics. Like, there's a lot of people who don't actually, even that is probably like, fuck. So like, if we were thinking about Blossom as an example, if they were on Blossom, is it easy to find those things in terms of like, you know, and also, is it mainly funds or fund managers of bonds that feature on Blossom? Or is it, I feel like now I'm like, the last question, actually, I've got 75 more.
So it is easy to find that information on Blossom. All you need to do is go to our website, and we have a live chat and an FAQ center. So you just type your question in and then it will serve you the answer. So ask it, what are our fees? What are the returns? Who's the fund manager? These are all really important questions. And in terms of the products that Blossom has, so we have two products. One's called Blossom Save, and that targets a 5.7% per annum return.
That's really good for fixed income.
It's very competitive. And one is Blossom Plus, which is a 3-month lockup, but targets a 6.75% per annum return.
That's amazing.
And we are funds. So we have an underlying investment in both those products of 413 different investments. So we have a fund manager. We make the investment decisions for you, so you don't have to go and choose one bond and then potentially watch it plummet.
Oh, so you guys have like actual analysts and you're basically a funds management company.
Exactly. And we choose fund managers. So people send money to our bank account and then we invest that into the products. It's managed by experts, fixed income experts, been doing it for 30 years. And then we offer returns back to our clients.
I feel like Vic's going to listen to this and be like, why didn't you ask this? Why didn't you ask that? But for people who are also listening and who might have been thinking the same thing, if they want to like get in touch and they're thinking, okay, like I want to do fixed income, still not really sure where to start, like just go to the website. Is that kind of just step one?
Yeah. Absolutely.
Can we quickly just finish with, sorry, I know I've been like absolutely just being like, don't worry guys, you can go back to enjoying your life now. I'm like, one more. Like the markets are all over the show right now. You're in a family full of many financial experts and people that are kind of living and breathing what's going on in the finance space. I'd love to just hear your own personal investing thesis or how you feel about what's going on in the world, or if you made any decisions or none because of it. Like it just would be interesting to hear, because I think you're obviously surrounded by a lot of people that know a lot about the economy and investing.
For me, it's just to not panic. I think nothing's ever as bad or as good as it seems. And if you look at, on the ASX at least, the Aussie stock market, the average yearly return for the last 30 years is 9%. And so you should be investing for the long term if that's what you're doing. So if you just keep adding small amounts over time, If you want to choose an index fund, you can maybe not in the 2 years, there might be 2 years of volatility, but if you expand your time horizon, which is really what equities are for, and you keep to your guns, you don't panic sell, you add small amounts over time, you're going to be fine. So yes, there's tariffs, yes, the stock market is going to crash, but I think for people who are just sticking to their guns and contributing small amounts over time, you're going to be fine.
Sorry, you just said gonna crash. Are we thinking it's going to be crashing more than it has been the last little while? Like, are we thinking it's going to be a full-on, like...
No.
Me panicking, you saying don't panic, and then me literally panicking.
I think it's still going to be volatile, but we had GFC and COVID type stock market volatility in the last 2 weeks. So I think hopefully it's going to get a little more steady and predictable from here.
Mine's a bit boring because I just told myself to put my head down and block out the noise and get
I
on
love
with
that.
work. I think if I had time, I think we're in a very busy period for Blossom right now, and so I wanted that to be my main focus. But I think if we had time, I mean, we've had some chats recently with a couple of people that, you know, backed their or just had conviction and really bought the lows and had a bit of spare capital to be able to do that. I like to think that if I did have the spare capital at the time to do that, I would have done the same, but it's always shoulda, coulda, woulda. And I really just wanted to block out the noise, knew it was going to recover, and then just try and make a plan long term, like Gaby said.
It's been so awesome to meet you both. Like, what you're doing is amazing. I can totally see the yin and yang. I know that's like a very overused word, but I think that's what makes a successful business partnership, is being able to celebrate the differences and like lean into each other's strengths and help out when the other person is weak. And I feel really excited to see what Blossom does, and I can't wait to put some of my money in. I think that I can be a little bit like bull out of the gates, like a bit excited. Go is probably too risky for like someone that's just learned about investing for 5 seconds. So I think putting some money in fixed income for me is on the horizon. So yes, thank you for opening my eyes up to a completely new asset class that, in all honesty, I don't think I would have considered otherwise. So thank you so much.
Thanks for having us, Soph. We really enjoyed it.
Thank you so much for listening to Raising the Curve. These conversations are designed to teach you everything you need to know to be better with your money, from saving to investing to talking with your friends about your salaries, all of that stuff.
And if you like what you heard, we would love if you could please hit subscribe wherever you're listening and leave a comment. Let us know what you thought about the episode.
And it only takes 1 second, and it would really make our week, our month, our year. Yeah. So please do it. Okay. Love you. Bye.
Okay, quickly, The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.